Today we'll be talking about demand and supply, and also resistance and support. Some people, they don't know how to differentiate between demand and supply, and also resistance and support. Now, for example, we have something like this. I want you to understand that this is a ranging market. From year to year, we have a ranging market. Around that area, we have a ranging market. This ranging market consists of a resistance and support. So now you should understand that this is a swing. From here to here is a swing. We have a break of structure around this area. This is a major break of structure. Please, you need to be able to identify your structure very well. This was when we have a break of structure. Yeah, we have a break of structure around that area. Now, listen, this area, this particular area you are seeing, this area is your demand area. It is your demand area. Now, this is your supply area. Let me label it so that you can see. This is a swing. From year to year is a swing. Now, how do you determine where your demand area starts from and your supply area? Just come to your fib retracement, draw your fib from here to this swing. You can see it's 0%. And for 1%, 0%. Now, you'll see that we have your 50% around this area. Below your 50% is your demand area. Any area around here is your demand area. Now, any area around this area is your supply area. This middle, this 50% is the midpoint, the equilibrium. And you can see that is where all the range is happening. Do you understand? So that is how to live it. Now, if you want to buy, you don't trade resistance of this is not resistance, this is supply and demand area. Here is your resistance and support. Do you understand? This is called resistance and support, but here is called supply and demand. This is structural analysis. Do you understand? Now let's go to the chart. So now you see that, for example, let's look at this. This structure, they reoccur almost not even every time. That is the structure that is being printed on the screen every time. All right, you see that immediately we have, this is a swing. From here to here is a swing. Secondly, we have a break of structure around this area. Do you understand? We have a break of structure around that area. Thirdly, you take your fib from here to here. Have you seen it? You just extend all through that swing. Then you target for your 50%. You've seen your 50%. Now, I told you from 50% downward is your supply area, is your demand area if you are willing to buy, and from 0% to your 50% is your supply area if you are willing to sell. Now the market moves from here to here. So it did all this. This is the range that we are talking about. You understand? You can see that you can just come here and draw your trend line. You see, draw. So this is where we have your resistance and support. Do you understand? All right. So I was expecting to see a push down to this area, because if I'm looking to buy, I like to buy within 75 to 90%. Now, another thing you look at for is this. Sometimes look at where, this is a liquidity graph. It's part of things you look at. This is a liquidity graph. Now, that move that started that liquidity graph started here. Let me just draw it out. You can just draw it from the last bearish that started this bearish move. I think this is it. Good. All right. Now, if you look at it, you see that was where the market came to before this move started. Those are some key points you also need to look out for. Do you understand? We call this breakers block. So immediately after you see the push. Now let's look at another example. This is actually your trade here. This area is your trade, not here, not support and resistance area. Now look at this. Now after this move, you saw this push. Now I want you to understand that a complete wave. This is an example of a complete wave. When you see something like this, this is an example of a complete wave. You understand? You see this, we have an impulse, a correction, and an impulse. That is it. Every structure moves in three ways. Now we have an impulse, the correction, then we have another impulse, and that impulse will replicate this particular first impulse. Those are the things I want you to note. Now if you look at this now, this is an impulse. All these are correction, because this is where we have a break of structure here. This is another impulse. You see that this particular impulse replicates this impulse. This impulse you are seeing here. Do you understand that? All right, so that is that. That's what I want to share with us today.